Hey guys, welcome back. Today we are going to discuss the California housing market in more detail. We're going to look at the recent home sales and price report for the month of October from the California Association of Realtors. We're going to discuss affordability. How much income do you need to make in order to buy at the median home price in the state of California? And lastly, we're going to talk about something that I believe could change the housing market in 2021. Now, if you've been following my videos for any period of time, I've been very bullish on the housing market through 2020, even into 2021 and potentially 2022. But there is something out there that could change the dynamic of the housing market as we move forward. I'm going to discuss that towards the end of the video. My name is Jeb Smith. I'm a real estate broker here in Southern California, and I appreciate you taking the time to watch. If you're new to me, new to my channel, it's all about real estate. So do me a favor, hit that subscribe button if you like information like this. And if you have questions, do me a favor and leave them below. So what we're going to do first is we're going to take a look at the home sales and price report for the state of California. I'm going to link to this in the description below. As normal, I've taken the time to highlight the areas that I feel like are important, but we're going to talk about the whole state of California. What's happening in Northern California, what's happening in Southern California, what do we expect to happen as we move forward. So I'm going to take a minute here and share my screen with you. All right, so we have the October home sales and price report. As I mentioned, existing single-family home sales totaled 484,510 in October on a seasonally adjusted annualized rate, down 1% from September and up 20% from October 2019. So what does that mean? Well, it means that home sales were actually down in the month of October versus September, but from this point last year, we're up nearly 20%. October statewide median home price was $711,300. That's down just a small tidge, if you will, from September, but we're up nearly 18% from October of last year. And year-to-date statewide home sales were down 1.3% in October. And we're going to talk about why that might be here in just a minute. So after setting new record highs for 4 straight months, California's home median price dipped on a month-to-month basis for the first time in 5 months. The statewide median price stayed essentially flat in October, slipping 0.2% to $711,300 from September's record high of $712,430. The year-over-year growth rate, however, continued to increase by double digits for the 3rd consecutive month and was the 2nd highest gain since February 2014. It was also higher than the 6-month average of 6.8% observed between April 2020 and September of 2020. At the regional level, sales increased in October in all major regions from last year, with growth rates of more than 10% in all but the Central Valley. The Central Coast had the biggest increase in October, with sales growing by 28%, followed by the far north at nearly 20%, San Francisco at almost 19%, and Southern California at 18%. The Central Valley region was the only region without a double-digit gain from the prior year, but still grew by 10% from a year ago. Additionally, all counties in Central Coast, Southern California, and San Francisco experienced year-over-year gains in October. More than 4 out of 5 counties, that's 43 out of 51, experienced a year-over-year gain in closed sales, with Mariposa County increasing the most. 7 counties decreased in sales, with Yuba declining the most at 16.5% from last year. Here's the big information. Sales in resort communities, they cooled down slightly from the past months, but remained robust in October. Housing demand in Big Bear, including Big Bear City, Big Bear Lake, continued to surge, with sales growing 125.6% from last October. So 125% gain year over year in sales in these communities. Why? Well, you're getting a lot of people who are now stuck at home, and they'd rather be stuck in a resort type community. Big Bear, Lake Tahoe, these types of markets. So through the first 10 months of the year, home sales in these resort markets have outperformed the state of California in general. So you get a lot of people buying probably second homes, buying properties where if they're going to be having to quarantine or stay at home, they want to be in this, these resort type communities. Home prices in resort areas are also gaining at a faster pace than the rest of the state. In October, Mammoth Lake's median price increased by 36.9%. Think of that. The median home price increased by nearly 37%, followed by Lake Arrowhead at 33.8%, Tahoe at 29%, and Big Bear at 26.8%. With housing demand remaining robust in these resort communities, price appreciation in these areas should continue to outpace other markets in the state in coming months. So if you're looking to buy a second home in one of these resort type communities, it's probably going to remain very, very strong. Buyer demand is going to be high. Inventory is likely going to be low. You're going to continue to see price appreciation. At the regional level, all major regions posted double-digit year-over-year median home price increases, and all regions except the far north set a new record high median price in October. The Central Coast led the pack again with an increase of 25.9%. As home sales in Santa Barbara and Monterey continued to surge, the San Francisco Bay Area had the second largest price increase of 17%. Followed by Southern California at 15.4%, Central Valley at 14%, and the far north at nearly 13%. So Southern California saw a nearly 16% increase in value year over year. So, if you put 5% down this time last year, you probably have nearly 20% equity in your property year over year. All but one of 51 counties tracked by the California Association of Realtors reported a year-over-year price gain, with 39 of them growing 10% or more. Santa Barbara had the highest price increase, gaining 64% year-over-year. San Francisco was the only county with a drop in price, with its median price declining 1.5%. So San Francisco went down 1.5%. Not a big decrease, but it did go down. And it has to do with a lot of people fleeing the city, going to more rural areas because they no longer have to work, say, in the city. They can work remotely, and people want to get out of high density areas. We're seeing it everywhere, from New York City to all these major cities that have a very dense population. With active listings dipping slightly from the prior month, while the momentum of sales continue to push forward into traditionally off-season markets, the unsold inventory index in October was unchanged from last month when it reached the lowest level in nearly 16 years. The index fell from 3% or 3 months in October to 2 months this October. So 2 months supply of inventory. Very, very few homes on the market. In order to change this market, inventory has to come in. Buyer demand has to slow. Interest rates have to probably rise. We know interest rates are going to stay low. We know buyer demand's probably going to stay high for the foreseeable future. For right now, with everything that is current as of today. So with that said, you're likely going to see a market move up unless what I bring in the end actually happens, and that could change the market. So active listings continue to decline significantly, with most regions declining more than 40% from last year. Not going to talk about the decline in property there. You can look it up, but significant declines in inventory. This time of year is going to be even more, right? You're going to see buyer demand slow this time of year. You're going to see inventory go down. It's the time of year. Holidays, people don't want to sell homes. People don't want people walking through their homes, especially with COVID out there this year. So you're going to see less homes come to the market. Therefore, buyer demand is going to be low. Pending home sales are going to be low. All of that is going to go lower. People are going to look at that and read that as that the market has slowed. Maybe this time of year, but it's normal. The market should continue to pick up after the first of the year, but you're going to see reports where it shows declining in the market. The median number of days it took to sell a home, single family home, was 10 days in October. 10 days to sell a home. It's crazy. Down from 24 last year. So 24 was even low last year. Now it's 10. The October 2020 figure was the lowest ever recorded. So the lowest number of days it's ever taken to a house on average, 10 days. 30-year fixed mortgage interest rate was 2.83% in October. That's down from 3.69% last year. And the 5-year adjustable mortgage interest rate was an average of 2.89 compared to 3.38 last year. Lastly, I'm going to make this real quick. California single family homes, we talked about it. 711,300 is the median price. Last month it showed 712,430. So the market has slowed a little bit, but probably because of lack of inventory. There's not a lot of properties out there. Therefore, not a lot of things are selling. And that's, pretty common at the moment. California townhomes, 520 versus 527 last month. Southern California, 657, 750. Last month it was 656, 750. So it actually went up 0.2% in our area. Southern California here, Orange County where I am, 930 is the median home sales price for the month of October. It was 915 last month. That's a 1.6% increase. And you can see here, almost every single county in Southern California showed some sort of increase outside of Ventura and Los Angeles County. So that is that report. Let's take a minute and look at affordability. This will be really quick. So 28% of California households could afford to purchase the $693, $680 median home price in the third quarter of 2020. That's down from 33% in the second quarter and down from 31% a year ago. So less and less people are actually able to afford the median home price based on this third quarter California housing affordability. This is also from the California Association of Realtors, which I will link to this in the report below as well. Let's see here. A minimum annual income of $127,200 was needed to make monthly payments of $3180. That includes principal, interest, taxes on a 30-year fixed rate mortgage at a 3.15% rate. 42% of home buyers were able to purchase the 512 median price condo or townhome. An annualized income of $94,000 was required to make a monthly payment of $2350. Double-digit home price increases fueled by a shortage of homes for sale pushed California third quarter housing affordability to its lowest level in 2 years. So basically, it's getting harder and harder to afford a home in the state of California just because prices are going up so quickly. Compared with California, more than half of the nation's households, 55% could afford to purchase a $13,500 median price home, which required a minimum annual income of $57,600 to make the monthly payments of $1,440. So the median home price for the U.S. is $313,500. 55% could afford to make that payment. I've highlighted some other stuff here and not going to get into that just in order to keep the video on the shorter side. So that is that, but I will link to it below. So what is it that I think could change the housing market? As I've mentioned, been very bullish on housing all year and really still bullish on the housing market. But if President-elect Biden comes in, elected president, if that does happen, because there are still people out there that think it's not going to happen. So I'm not going to say that it is just to appease everyone. But if he does come in and the state of California goes on or the United States for that matter, has a full lockdown where, there's mandatory lockdowns and, like we started with COVID, I do believe that sort of impact is going to cause major turmoil. I mean, I realize that we rebounded from it the first time very, very well with additional stimulus that was put out there. And while I do believe there will be additional stimulus at some point in the next couple of months, I do believe shutting down businesses for a second time is going to create chaos. It's going to create issues with, the people that are just getting by, regardless of what type of stimulus you put out there. And so if there is a lockdown, I realize that right now in the state of California, there are talks of a potential lockdown, and that could affect California. But if there is a mandatory lockdown across the United States that affects everyone, then you're going to have, major turmoil in the housing market, depending on how long that lasts and to what degree they actually make the lockdown. So for now, that hasn't happened. And I'm hoping that it doesn't happen. And as long as it doesn't happen, I think that you'll continue to see a very strong housing market in 2021. You're going to see a market just like 2020, low supply, high demand, low interest rates. You're going to have property selling at record prices. You're going to see a lot of these reports where home prices continue to go up, interest rates probably continue to go down. And to what degree does that stop? I don't know. It's going to make affordability more of an issue. And at some point in the future, there's likely, some stalls, some pullback. You have to deal with the stimulus that's put into the market. But for the foreseeable future, I don't see that happening. And so to address all of those people that have always asked me about buying a property, should you buy a property? If you're going to live in it for an extended period of time, you're comfortable with the payments, I would say, sure, why not? You've got to live somewhere, and in a lot of markets, it's cheap to own a property as it is to rent. So you have to weigh that. But if you're someone who's thinking of buying a property just because you think it's going to be worth more in a year or two, you're going to be able to sell it, then you probably should reconsider what you're thinking. But those are my thoughts on the housing market. Again, I think we continue to see a strong housing market unless there is a mandatory lockdown that's going, that affects the entire U.S. But as we get more information, I'll continue to update you. I do appreciate you taking the time to watch. If you haven't done so already, do me a favor, hit that like button and leave me a comment. As mentioned a moment ago, I appreciate you taking the time to watch. I appreciate your support and hope to see you again soon. Have an awesome day. Bye-bye.